Welcome. Well, you've been investing on the JSE recently. You're probably one of those thousands of people trying to find the bottom for Hulamin. It was listed only a year ago, and it came to the market with a lot of substance behind it, but unfortunately the share price has not performed. And the concern that goes around Hulamin is the financial results that, in fact, were released this morning, and the interims that came out 6 months ago, did not reflect a good way forward for the company. I'm going to be talking in a little while to Alan Fourie, because at some point in time this business is going to be giving us the right numbers. Alan will no doubt be arguing that the figures that we're seeing today are being distorted a great deal by two very important issues. Listen to his argument, unpack those parts of the conversation, and I'm sure you'll decide whether a 19 projected price-earnings ratio, because that's what you're looking at Hulamin right now, is value, or if it's not. But there will be a time that Hulamin's going to be offering great value. I think it's going to be a good discussion. But before that, Rene is here. She's from PSG Future Wealth, a completely new business within the PSG Group. And we'll talk about that in a moment, Rene, but you are in a very male-dominated company. I mentioned this to Alicia a little bit earlier. When the results to August came out, the headline was crouch, touch, pause, engage. Something to do with rugby, not a whole lot to do with business. What's it like working with Yanni and the boys?
I think I've been involved in the group for in various capacities, about 8 years. So, I've got to know them very well. And I think, as it's a very entrepreneurial business, and if you are an entrepreneurial company, you're given the opportunities to grow. The fact I've been a female hasn't kept me out of any of the boardrooms, and I think it's been a good, for me it's been an incredible experience in the last 8 to 10 years with the group in various capacities, and to be grown up to be made CEO of this business now.
I guess the main point that you raised there was entrepreneurship.
Yeah.
It does seem to be almost a strategy of the business and Yanni himself is a great entrepreneur,
Absolutely.
To create little businesses where management have a stake.
Absolutely. I think that's one that's very important, always been in PSG Group. In our business, management's got a 20% stake. I think it does, lend the credibility of the business. Also, I think there's a lot of opportunity within PSG Group that's now highlighted by this acquisition. To work together towards Yanni's said often that he wants to be a bigger provider for private wealth money in South Africa, and this is now another adding building block to that. And there's a huge amount of synergies in the group with group companies, to really exploit this opportunity in terms of private wealth much further. So I think that's what our focus will be, not only for us as a business, but also to look at the opportunities that's provided by the greater group now, for products and also to the distribution base within the group.
PSG's had a habit of creating divisions which have been spins off as separate listed entities. Is it likely to happen to yours?
Well, we'll see how big we get.
Really? Yes, but that is something that you might be aiming for?
Well, not for now. I think for now, there's a I've been part of an entity that's been sold before, and I think, for us, I think there is a lot of value first to be created within the group.
This is Channel Life.
Not that I come from Esha, so I've been through the Esha merger within Cubes and the spin-off of that business. So I think that's why my previous involvement remains with Channel Life. So I think that's, the value, and I think there's a huge amount, for us now, PSG brings a huge amount of credibility to our investors out there, for this new business.
Where was Channel Life positioned?
Channel Life was very much in the lower end of the market. So we started it as a division of Channel Life in about 2001, trying to grow its balance sheet. Channel at that stage had ideas of listing as a business, and it only had 200 million on its balance sheet, which was far too small, if you had ambitions of listing. And so that was the main objective of this business, to grow Channel Life's balance sheet, which we grew to about 6.5 billion in the last 4 years.
It's an incredible achievement to have done that, but clearly you didn't do it by focusing on the lower end of the market.
No, I met with an institutional market, which is difficult given that Channel's main focus in this business is low end of the market. So you face this dichotomy for investors, and especially institutional investors, wanting to invest in this business while Channel Life operates in a very different
market. So you were in the wrong place.
You were in the wrong place, And I think this has now given us the opportunity to really grow.
So let's just explain what's happened. The Channel Life investment business has now gone into PSG.
Into PSG,
You as management own 20% of the business, but it's targeting now at the high net worth individual areas. What part of PSG in particular will you be working closely? Presumably asset management?
Yeah, PSG and PSG fund management. I think there will be a huge amount of working together, and then I think PSG Consult give us a distribution base, but being part of the group is never, it doesn't come with a guaranteed revenue from that business. It's always been, if you're good enough for your products to be sold by PSG Consult, then that would happen.
That's a really interesting background, and right now, so we're in a stage where I'm sure your clients, these high net worth individuals, are a bit concerned. Most people are confused about what's happening in the world. What message are you giving them?
I think I heard Anne say as well that people shouldn't panic, and I think that is probably the biggest part. But I think property markets give different opportunities to investors. I come from a structured product environment, so that's different opportunities. And I think people need to look at, not make rash decisions. We've seen a huge amount of money moving out of share portfolios into cash, in our own business.
Isn't that smart?
Depending on where you're at, because a lot of people feel that they've lost, if you sold out at the wrong time in the market. And the message that we're giving to the guys, you've only lost once you've sold out, in the business. And I think the guys really need to stick with their advisors, their investment strategies that their advisors. We very much have a sell-through strategy to advisors.
How smart are these advisors? And I ask that because I was in Davos last month with probably the smartest guys on the planet, and they were confused about what's happening. They feel that the subprime crisis hasn't even started to affect investment markets yet. Why should people be sticking with the financial advisors if really smart guys have got no idea either?
I think, the most important thing is with the advisors, especially if it's an advisor that has grown with his clients for a long time. He understands very much what that client's risk profile is and the client's tolerance.
So it's looking from the other.
And it's, looking at that way, I think it's, it's one of the advisors said to the clients the other day, the client's presentation, that, the client's markets are volatile, but things will correct itself over the long term. But this client was 80 years old, so he was very confused. He said, I don't have time for the markets to correct myself, son. I need money now. I think that's what we're the role of the advisor comes in. And they're very reliant on advice from asset managers, and, and that's where we see the role for us. We're not asset managers, but we can assist the advisors to get the correct information to enable them to make the right decision.
Different asset managers are making different calls. People units now for a year said let's go into cash, whereas other asset managers might say stay in equities. What are you telling your advisors to tell their clients?
Well, we've got very much a multi-manager type of approach to our business, and we rely very heavily on our multi-manager to make investment decisions for us.
Who's that?
We're teaming up with probably one of the PSG Group companies. So we'll announce that probably later, in terms of what our asset management strategy would be in future. But
big responsibility on their shoulders.
On their shoulders, yeah. But I think they should be able to give the guys the advice that they need to do that. I think it's very important in our industry not to try to be everything to everybody. We're a life company. We're not an asset management company. We can't profess to have any of the capabilities that the asset managers have out there. So I think it's important that role of multi-managers is becoming very important.
Rene Miles is with PSG Future Wealth, another of the subsidiaries in the PSG entrepreneurial group. Man, there's a good business model there somewhere. 20% of the subsidiaries going to the management. They're focused. They perhaps work a little harder than if you were a wholly owned organization or part of a bigger group. And it'll be an interesting story to watch. Rene's done fantastically well over the past few years, as you heard earlier, taking a zero balance sheet to 6.5 billion, and it's going now aiming at the 10 billion mark. So maybe Yanni Maton's back to another winning horse. We'll see. In just a while, we'll be going into that Hulaman story with the chief executive.